Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, we are going to continue our conversation for remote working stocks. Does that even make sense? Work from home stocks, stocks that are going to benefit from a remote working environment. Last video, we looked at snacks. Working from home, we're going to be eating a lot more snacks. We're going to be spending more money on snacks. We're going to be expanding our variety of snacks. So that's basically that I covered. That's what I covered last video. We looked at tons of great stocks, a lot of good potential ones. I believe one that I really liked and waiting for is ticker symbol WILC. That one looks very undervalued, but it is a very slow burn. So it's going to take some time, but based on the sales, income, and EPS going forward relative to the shares float, that was way undervalued. So maybe I can put a little picture or something up here so we can see it. Reminder to myself. So today we're going to be looking at another angle of remote stocks that are going to do well from the remote work environment. We're going to be looking at electricity. Now, when we think about, electricity, we're working from home, so we're going to be using a lot more electricity than we were last year or the year before or ever, historically speaking. This whole remote environment, working from home at a different location, this type of environment is new relative to, how long people have been going into the office, which, I mean, people have been going into their office or place of business for decades, not a century, but several decades. And we have now just flipped, not fully, but quite a bit from going into a commercial building to working at home. So, this whole flip started, I would say, uh, uh, 2 years ago, 3 years ago. So even today, people are going back to the office, but a lot of companies are saying, oh, hybrid, work more from home. If we look at the trend, let's just make it easy. Look at a trend. If we look at a chart where on the left side it says, people going into the office, and on the right side it says, people working from home, we're going to see the chart going kind of like this over time because as technology advances, as, we can take meetings from our laptops, our phones, why do companies need to spend money on a commercial building, commercial rent, etc.? So just my thought, that's just my opinion. I don't know what I'm talking about, but we're going to look at residential energy companies. These might also include some bigger companies, let's say PG&E potentially. Maybe some smaller residential energy companies as well that we may have never heard of. So, yeah, just be prepared. We're going to go through quite a list of stocks. I think I have not done any homework on this. Um, just a forewarning, if the company is losing more money than it makes, we're going to skip it. If it does look like a really potentially undervalued company, I will perform the stock pricing calculation, and I'll show you guys how that looks. But essentially, we take the sales plus the income, and then if the market cap is over 1 billion, we add it to our calculation. If it is not, we exclude it. And then we're going to add in the cash and debt no matter what. And then we're going to divide all of that by the shares float. And that's going to give us the general price of the stock. So, and we do need to keep in mind that there is going to be pushes for cleaner energy in the future. So I think that means less oil, maybe less natural gas going forward. You know, who knows? We're gonna look at the numbers. We'll crunch it, and go from there. So without further ado, let's go ahead and jump on in. Alrighty, you guys, we are on the world's greatest website. If you don't know, look into it. It will definitely change your life if you are committed. So what we're going to do is we're going to go to the screener portion here, and let me just shrink my head while things are loading. I want to show you, oops. All right. Okay, so I want to show you what I'm selecting. So we're going to go to industry right here, and we're going to go to utilities, and we're going to look at regulated electric, and we're going to look at independent power producers, and then we're going to look at utilities renewable. Maybe we should just look at all these, but it's a lot. Let's see. If I go to sector and then utilities, how much is that? 118. Do you guys really want to go on that journey with me? I really want to do it. Let's we'll just keep it simple for now. We'll just keep it simple. So we'll just look at utilities and we're going to look at regulated electric and then we're going to look at independent power producers. Okay, so there's 43 here. And again, this might go quick or this might take a minute. So I'm going to open 5 at a time and then we'll just jump right in and I'll let you know if I think it's worth looking into or if we should skip it. So I'm going to go ahead and open a little notepad. I highly suggest you maybe take some notes, or I guess since this is in video form, you can just come back to this later. Okay, so first one is going to be ticker symbol AEE. And I just want to look at the bigger picture here. All right, so this stock has doubled in about 8 years. That's pretty good. That's like a 20% return a year. No, 12, maybe 12. I don't know. Let's look at the numbers here. So they make 8 billion plus their income. Let's man, this one looks kind of good long term. Let's crunch some numbers on this and see if we like it. So we're going to do 8 billion, so 8.14 billion. So, all right. So this is a good precursor. So sales, income, market cap are all in the billions. However, shares float is in the millions. So I'm going to do this longhand and just to show you, the exact. So 8 billion, 140 million plus 1 billion, 90 million plus a market cap of 21 billion, 410 million. Yes, that is correct. And we're now going to add the cash and remove the debt. But while we're down here, let's note the revenue. Revenue since 2016 was 6 bill, 6 bill, 6 bill, 5 bill, 5 bill, 6 bill, 7 bill, 8 bill. Bill is billions. A lot of selling. Let's look at the balance sheet. So we'll look at cash and short-term equivalents for this effort. So they have 250 million, so 250 million in cash. How much debt? I'm going to guess they have like 5 bill in debt. Let's see. Total debt, come on, 15 billion in debt. That's nuts. So minus 15 billion. 0.95, okay. 15, yep. So, and now we're going to divide this by our shares available, which is 200. So divided by 257,490,000. $61 stock trading at $81. So this is actually overvalued. I'm just going to put this in my notes real quick. So AEE, PT equals 61. Currently 81. So it's overvalued. And does the table tell? Yes, it does tell us. Okay, so right here, the PE is 19.59, meaning that it is slightly overvalued. But if we look at the forward PE right here, the 17.5, it does say that in the future, it could be a little less overvalued, but it is still slightly overvalued. If we could get a PE of 15 or less, that's pretty good. So this one's not bad, but there's probably going to be better ones. All right, this one also is looking a little bit overvalued. right here. The forward PE looks like it's in the future it's going to be undervalued, but currently it's showing overvalued. Let's plug these numbers and just go from there. So 19 bill right here, and they have 1.99 bill in income plus 42 billion 490 million in market cap. Oof, they look very kind of over leveraged. So back in 2016 they were at 16 bill, 2017 is 15 bill, 2018 16, 2019 15, 2020 14, 2021 16, 2022 16 point or 19.6, and trailing 12 months 19.7. So some growth there. Net income is kind of flat. Okay, so let's add the cash, which is we said cash and short-term equivalents. So this is gonna be 697 million. In debt, I'm gonna say it's quite a bit of debt. Total debt 40 billion minus 40. How much is that? 40 billion 913 million. Whoops. I did minus 40, so plus 40. Okay, so minus 40 billion 913 million. Yep. All right, and divided by 513 million 700,000. $46 stock trading at 84. Also overvalued. I don't really like how they're handling their net income. It's kind of flat. It's been flat for like 7 years. I don't know what they're doing. So this is AEP. PT equals 46. Currently 84. Okay, so we're gonna pass on this one as well, but good to know. All right, here's a cheaper looking one. Ooh, it's kind of new. Ooh, it looks like it's undervalued. What's going on here? All right, this might be fun. I just want to make sure that they have cash and debt showing. Okay, they have their cash and they have their debt. Whoa, 40 billion in debt? Do you guys see that? Total debt 40 billion 913 million. Why is their debt increasing so crazily? Total liabilities 69 bill, total assets 93 bill. That's getting out of hand. It's getting way out of hand. We're not gonna look at this one, guys. I'm sorry. It does look like it might be turning back around, but that is that's a gross amount of debt. So we're gonna skip that one. Okay. We can see this one's trending down, but is it going too far down? Let's see. Okay, so they make 8.2 billion in sales. Let's see what they got. Wow, from 2016 to about 2021, they had 6 billion in revenue. Then 7 and then 8. So they're growing a little bit. Net income has been flat, but it is kind of trickling upwards. Trickling upwards, is that possible? Balance sheet, they have 69 million in cash. Wow, they had a billion at one point. Okay, total debt 9 billion and they make 8 billion. That's crazy. Total assets 41 billion, total liabilities 21 million. So almost a 2-to-1 there. I don't like how they are finagling their debt there. They make 8 billion, but they have 9 billion in debt. They're slowly paying off their debt. It looks like. Let's go back down and check. Total debt went, no, they went from 11 billion in debt to 8 billion in debt to 9 billion in debt. You guys, we're gonna have to skip this one as well, unfortunately. Yeah, we're gonna have to skip this one. I think it needs to consolidate. I think there needs to be a management shakeup there, but We need some consolidation 2024, 2025, 2026 here. Um, yeah, it's still trying to find its momentum. So it's I can see this going down to 15 bucks, 10, 15 bucks. It's never gotten that low, but I mean, there's something's happening. They're not doing well in terms of managing their debt. So we're gonna skip that. CEPU, CEPU, a $7 stock. Ooh, it went from 2 to $7. Let's see what we got here. Wow, they make 94 billion in sales. Questionable down here. All right, let's see what we got going on. Wow, look at this growth. Total revenue went from 1.2 bill in 2024 or 2014, 3.2 bill 2015, 3.5 bill 2016, 9.6 billion in 2017, 21.9 in 2018, 35.9 billion in 2019, 38 billion in trailing 12 months. So they stopped reporting. It's not good. Why did they stop reporting? Are they not in the US? They're not in the US. Okay, so that's it's not good. Um, how can we trust this data? I mean, how, I don't know. They like they went from 1 billion in 2014 to 35 billion in 2019. What? Is that possible? All right, let's just do a little, let's see if I can go down a wormhole real quick. I want to look at investors, relationship with the investor. I just want to see what their updated filing is. Okay, they're making acquisitions, but view webcast. I just want to see the PDF, I guess. Let's see. CEPU. Come on, I don't. I'm not seeing anything that really is annual report 2023. Let's look at this. Oh gosh. Okay, I'm gonna disappear my bubble really quick. Unresolved staff comments. What? What? Unresolved? What is that all about? Unresolved staff comments? Item 4A? 4A. Not applicable. What's going on with this thing? Okay, let's go to the top and let's find, we're gonna dig in. Did I pass it? No. Okay. Please hold. Please hold. All right. Let's see. Share capital. Key information, maybe? Let's see. Business overview. Yeah. Financial information. Oh gosh. You guys, this is clear as mud, and I don't like this. Although it could be something amazing, this is just so. Okay, here we go. Damn it, they have an Argentinian currency. Ugh. Income. Okay, what's the net cash flow? It's up. Dividends, cash. They have nine. This is Argentinian money. Is this Argentinian money? Yes. Yeah. They were really strong in 2020, cutting more than half in 2021, working its way back in 2022. Uh, we are. I mean, are institutions buying this? Intel. Oops. CEPU. Let's see. Institutional ownership is at 3%. This shows 4 million shares, 4 million out of 154. So if I do 1 divided by 151, 2.6. Okay, so institutions have been selling. This could be something good, but I am gonna have to pass on this just solely because of how difficult it is to find the information. Um, like what is this? Is 38. Okay, it's an ARS down here. So it's showing 38. Let's see. Net income is showing 12.22, 12,227. And right here we're seeing 25,798. Okay, so right here, that's operating income, net income, revenue. Revenue, no. Oh my God, there's okay. This is really cool, but it's not gonna work. So we're gonna pass on Sipu, and I'm just being ignorant here. Sepu? We're gonna pass on Sipu. Sepu, I don't know. Okay, moving down to the next five. Dominion Energy, nice. Duke Energy, nice. Okay. We're seeing a lot of debt at these energy companies. All right, this one looks overvalued. So they make 8.5 billion in sales, but let's look at their debt. Total debt's 13 billion. Why are they doing that? And it's just going up and up and up. Is revenue going up and up with that? Kinda. Man. Is there a company that does not have as much debt where sales exceed debt? Um, we're just gonna, to make things go faster, we're gonna just refer to these. So it's showing that it's pretty overvalued right now, but in the future it's not gonna be overvalued. Um, yeah, the debt is just a killer there. So we're gonna pass on that one. Let's check this one out. CNP. Ooh, nice bull flag. Here's our flagpole. Here's our flag. We should see this go up to 34 plus. It is overvalued. In the future, it's a little less overvalued. So they make 9.3 billion. How much debt do they have? Total debt is 16 billion. What? Their debt is just getting out of control. Their debt has doubled since 2015, Has their revenue doubled since 2015? No, that has not. Red flag alert, red flag alert. All right, pass. Dominion Energy. This one's pretty popular, I think. Ooh, this one's taking a beating. All right. They make 18 point whatever bill. Wow, so they're pretty overvalued now, but in the future they're really undervalued. So let's check out their debt. And they make 18 bill with 1.2 bill positive cash flow. So they've almost doubled since 2016. Total debt 45 billion. God. Total debt has just been rising along with it. Total assets 104 billion, total liabilities 76 billion. That's not even 2-to-1 ratio there. This is just energy companies are not looking good right now. This is crazy. Wow. 27 bucks. I could see that happening. Wow, it broke the 200 SMA on the monthly. That is huge. That is huge, huge. Um, the 365 on the monthly would be the next one. Let's see if I can do that on here. 365 SMA. Can I do that? That would be filters settings. Okay, let's add another SMA. Simple moving average, 365. And we're gonna make this one blue. Like that. Oh my God, you guys. Did you see that? Did you see that? Did you see that? Look how close it is to the 365 SMA. Ooh, 44 bucks. It's going there. Is it worth 44 bucks? Let's see. Still, I don't think it is. But let's do math. Let's do some math on it. 18 it's not billion. So 18 billion 150 million plus 1 billion, whoops, 1 billion 210 million plus 43 billion 160 million. All right, cash and debt. Total cash is 153 million. That's weak. That's so weak. Plus 153 million. 153 million minus the total debt, which is disgusting. 45 billion minus 45 billion 678 million. Ugh. And divided by 832 million, 120,000, whoops, 120,000. $20 stock trading at 51 bucks. All right, not quite. So pretty crazy. It's gonna teeter on the 365 SMA, and yeah, just a bummer. Let's I kind of want to add a volume weighted average. I'm not trying to make this work. I just VWAP. It's only an intraday. Let's see. Let's do yellow. Save. Yeah. So it's on intraday, it's not monthly. So I'm gonna remove that. That's a bummer. Do I want to do a 2-year SMA? That's a lot. That's excessive. Let's do it. Let's just do it. 730. I don't think we'll see it on Dominion because it barely showed. Yeah. Okay. So it's good to have. We have it listed for the future, but let's go to we're gonna pass on Dominion. Yeah, we're gonna pass. All right. DTE down to eat. All right. This one's not bad. So they do 18 billion in sales. They're not badly overvalued. Revenues, nice. It's total debt 19 billion. Okay, so that's good. Are they paying their debt off? Kinda, not really. So their total debt has doubled from 2015. Their revenue has almost doubled. This is critical because they need to really get that under control. Um, let's wow. This thing has really done well, but it's gone all the way back to 1983. Do we want to look at this one? No. It's overvalued. Let's not put lipstick on a pig. All right, Duck or Duke Energy. What am I talking about? Duck. Wow, this is probably the cheapest one we've looked at in terms of price to earnings. Uh, wow. Wow. It came down and touched the 200 SMA. That's beautiful. I think we're gonna chart this one out. So this makes 28 billion in sales. Revenue looks slowly steady. Net income is kind of all over the place. Let's see their debt. Total debt 73 billion. Total liabilities 128 bill. Total assets 178 bill. That's not really healthy. This just does not fit my investing profile, honestly. This is gonna keep going down. So, I mean, it's a 4.4% dividend. Let's this has been around since 80 82. Let's I'm gonna do a little experiment here. Because this experiment is basically, I just want to see what the average 10-year return is for some of these, because a lot of them are trading slightly up and to the right. And, some years they have really big years, some years down. We're on a downtrend now, so it might be beneficial to kind of see if we can get in on the tail end of these downtrends. So I apologize for the latency right now. I'm opening a bunch of things, doing a bunch of fun stuff right now. All right. So, what is the 40-year return for Duke Energy? It's got to be kind of strong, in my opinion. Okay. I'm gonna guess 9%. Let's see. Whoops, whoops, whoops. Average 11%. That's not bad. And 10 years has returned 7.9%. This is showing 7.37. So not a bad company. I think if we could catch the tail end of this, we might be good. So in my notes, I'm just going to note down Duke 200 SMA. Duke, get on 200 SMA. Okay, very cool. Let's look at our next batch. All right, you guys. Next one is EBR. $8 stock. It's in Brazil. My only question is if it's not showing up-to-date financials, we're gonna skip it. It looks pretty solid. I mean, I can't see any debt or cash. It is not up to date. It's back. It's only showing up to 2019. So what about quarterly? Yeah. Balance sheet as well. So we're gonna skip this one, unfortunately. EBR again, Brazil. Is it up to date? Yeah, it is. It is. It is. Okay, cool. So this is a $9 stock. It's up to date. I feel good about that. Similar chart to the last one. Sales, it's not showing income. This might be a scrappy one to calculate. Wow, they had 60 billion at one point and now they're half that. What happened? Their net income is cut in half. I mean, they're getting better compared to last year, but I wonder what happened. Uh, Total assets 270, that's good. Total liabilities 159. So that's almost, no, not quite. That's almost a 2-to-1 ratio, but not really. Total debt's 59 bill. So even though the 59 bill exceeds the 35 bill, it's not too horrible. What's up with the income? What's up with the income? It's net income positive of 1.45 billion. Let's just calculate this one to see if it's undervalued or not. So we have 35 billion 120 million plus the market cap of 19 billion 390 million. And the income is 1 billion net income. Where is it? Okay, it's plus 1 billion 415 million 650,000. Yeah, that's right. Okay, now we're going to add the cash, which is the cash and short term. That's crazy. Oh my God, they have. What are they doing with all that cash? What are they doing with that? Oh my God. Plus 23 billion 322 million 220,000. 23 billion 322 million 220,000. Yes. Okay. Total debt is quite a bit of that. So minus 59 billion 859 million 690,000. All right. And let's divide this by 279,940,000. $69 stock. What? What are they doing with all that cash? Their quick ratio? Oh my God. There's no other electric company that we've seen like that. Okay, so if this is true, institutional ownership is going to be way over 1.21%. Okay, so how do ERB? Ah, there's two ERBs though. ERB-B? Did that work? Did something go wrong? No. Let's just search it. Let's see if I can find the search. So the stock is this. Do, do, do. Okay. EBR. Okay, it's dot. It's the dot B. Can you do that in a URL? You can. You can? You can. Preferred class B. Okay. So there's 1.8 million shares held. So 1.8 divided by 279. So institutions are selling 0.64% ownership. So we should see some selling down here. Look at this. I don't know what to believe. I don't know what to believe. I really don't know what to believe. BlackRock sold some. A lot of people are selling out. Okay, so there's been a lot of selling. Um, Jane Street purchased $419,000 worth. Has this been 60 plus dollars before? No. Does it offer a dividend? It does. Um, Looks like there's a buyout. There's some stuff going on down here. Um, Dang, their cash literally went from 107 million to 10 billion. So this is crazy. Brazil raises about 6 billion in Eletrobras shares. Wow. This is this is crazy. So I don't know if they're being bought out. I don't know what this means. Let's see what this, let's just do some quick research on this. Uh, the federal government diluted its stake. Uh, so there's going to be some dilution next year. Just sounds kind of a conflict of interest. Big because I mean the government's going to dilute. So, I mean, so crazy. It just seems so undervalued, and we don't really know what to expect in the future. I like it, but it's just too conflict of interesty for me, so I'm gonna pass on it. That was fun though. That was a nice little deep dive. Okay, moving on to ED. It's undervalued right now. 12, but in the future it's overvalued, so that's not good. They make 16 billion in sales. How much debt? 23 billion in debt. Total assets 69 bill, total liabilities 48 bill. That's not a really good margin right there of safety if something happens. Um, let's see what's been going on with this company. been slowly going. Let's check it out here. I'm gonna say like 4% over the last let's see. Oops, ED. They don't have it. So it's called, oh, it's Argentina. It's up to date. It's up to date. Nope, wrong one. Consolidated Edison. It should be in here. Whoops, dang it. Here we go. All right, let's see what the lifetime return is. Okay, now grab it. All right, I'm gonna say, gosh, 4%. Average is 10%. So it's definitely heading into a downtrend. Man, I just can't get past the sales to debt. That's just so horrible. And it's entering a long-term downtrend right here. So we're going to pass on ED, unfortunately. EDN, this was the Argentina one that I just clicked on. Wow, look at this run. Wow, went from $2 to 60. And then again from $3 to 15, so kind of crazy. Let's run the numbers. This one looks pretty undervalued, depending on the debt, actually. Oh my God, 15 billion in debt, and they make 800 million. We're gonna pass. EIX. They make 17 billion in sales, revenues, pretty good. Total debt, 31 billion. Man, I just can't get, like, debt is so bad because with the rates going up, it's just gonna hurt them so much. We're gonna have to pass on this. I feel so bad. We're passing on so many stocks. Okay, going on down. I bet even the first couple that we looked at, they probably had a ton of debt as well. All right, we have a Chilean company, $3 stock. Oh, it's so new. 10% dividend. They make 6 billion. Wow. Oh, that's Chilean money. Damn it. Okay. Okay, so total debt. So we have to look CLP to USD. CLP to USD. Okay, so I'm gonna grab their total debt right here. All right. So that's 3 billion in debt. And they make 6 billion. That's good. That's really good. Total liabilities is 7.7, total assets is 11. So that's almost a 2-to-1 ratio. Cash is a lot. That's a lot of cash. You know what? This company looks really good. Oh, look how undervalued it is. A PE of 2.7. Are institutions buying this? It says institutions own 2.8%. I'm going to say they own a lot more than that. ENIC. A lot more than 2%. Oh my gosh. 31 mil, they own 31 million shares. So we're gonna do, so we'll do 31 divided by 496.6 times 100. 6.2% is actually what they own. So they own twice as much. That's really good. Let's run our numbers here. This is insane. This is really insane. All right. So they make 6.6 billion 540 million in sales plus 1,660,000,000. Yep. Plus market cap of 4,558,000,000. Add cash, remove debt. So they have this much. They have 1 bill in cash. That's good to know. Because they're showing in the thousands, I believe. CLP values in millions. Yeah. So 1 billion plus 1 billion. And okay. And total debt is right here. Okay, so minus 3,037,590. Okay, so now take this divided by 496. $21 stock. Rating at $3. Wow. 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 We're gonna definitely watch this one. ENIC PT equals 21. Current 3. 3. Wow. Okay. That's awesome. That's the best one I think we've found so far. All right. Moving back on to another, it looks like a US company. Yeah. Eversource. That sounds pretty cool. Sounds like a good solid company. 12 bill in sales. Debt better not be more than 12 bill. It is 22 bill. That's almost double. Oh my God. Their debt is gonna kill them. This is gonna come back down to 35, I bet. I bet. I bet. I bet. Okay. We're gonna skip this one. ETR. They do 13.8 billion in sales. Revenue is pretty flat. Total debt, oh my God, twice that. 26 billion debt. That's insane. We're gonna pass ETR. EVRG Evergreen? Nope, I don't know. All right. 5.9 billion in sales. Total debt. Total debt. 12 billion. Gosh, more than double. That's crazy. We're gonna skip that. EXC. All right, they do 19 billion in sales. Kind of looks fair value. 40 million in debt. No. This thing's going down. This thing's gonna go down to probably 20 bucks. Wow, that's ugly. All right, we finished our first page. We're now going on to the second page. First Energy, Fortis, G&E, He, Ida. All right. Looks like it's heading downward. Ooh. They do 12 billion in sales with debt of 21 billion. Not the worst. Hey, their debt's kind of decreasing. It went from 24 bill down to 21 bill. Total assets 46, total liabilities 35, almost 36. This one kind of looks like it's in good hands, like the company's trying to turn it around. Uh uh yeah, 12 bucks. Wow. I think this comes down back to this kind of fair value. Needs to come back down. I would say probably to 20s, low 20s. Yeah, low 20s. We're gonna pass on it. All right, this company does 11 billion in sales. No data. We're gonna have to pass. Looks like it's coming to a potential move up, actually. So good for them, but their price to earnings and their forward P, this is one of the more undervalued companies here. They're slowly paying off their debts, but yeah. I'll let you guys do that one to check into that one on their website, their financials. GNE 334 million in sales. Total debt. No debt. Am I right? Am I crazy? No debt. All right. We might have found one look worth looking into. Okay. Okay. So I'm excited. I'm excited. Let's run the numbers on this. So they make 334 million. Everything's in the millions. Yep. So I'm just going to shorthand it. So 34.9. They're profitable plus 47.2. And the market cap's under 1 billion, so we're not going to include it. But we are going to include cash and we're going to minus debt. Cash is 99, so plus 99.06. No debt, and we're going to divide this by 20.84. This is a $23 stock trading at $14. All right. It's a little hot. Let's see if institutions are buying it. I'm gonna guess maybe. Like this is one of the fairer ones. 27% ownership as of updated data. This is 26. So slightly, institutions are slightly buying this. It's a little hot in like historically. I mean, it went from $3 to 15. That's pretty hot. Like temperature wise. So what we might see here is a cup and handle. So here is the cup right here, and then the handle's gonna come down to probably 11 bucks. So, but I mean, it's the momentum is strong right here. It's so strong. It could just zoom right up. Um, we're gonna note this one down because I would not mind holding this for the downturn because there's not much downturn to go. This is a really well-ran company. Like, I just want to read about it really quick. Oh, cool. They do solar and cool. This is a good one, you guys. Notes. So GNE equals PT of 21, current 14. This is a good, that might be a good long-term ad in my opinion to my Robinhood challenge. All right, cool. Next is Hawaiian Electric. It's a little beat up here. They make 3.89 billion. How much debt do they have though? Total debt's 3 billion. So Not bad. Their debt's kind of getting worse. Let's see what their revenue looks like. Revenue 2.3 bill, 2.5 bill, 2.8 bill, 2.8 bill, 2.5 bill, 2.8, 3.7, 3.8. Okay, so recent jump. Net income is growing. Kind of. It's been flat actually, like historically. I mean, this was trading at $6 before. From in 50 years, no, 40, 20, 40 years, it's gone up quite a bit. I don't know if it's really worth looking into that much. You know what? I think it'd be the 365 SMA. I think it needs to come down like another $10, honestly. So I'm just gonna note that down on my little notepad. HE at 365 SMA. All right. All right, IDA. They make 1.7 bill. Total debt 2.9. Not the worst, not the worst. Let's just look at their revenue really quick. Revenue, oh gosh, it's been pretty flat. It's been pretty flat for 7 years. Ooh, are they increasing cash? Their cash is not doing much. Total assets 7.5, total liabilities 4.7. Just kind of feels like this one's flat. Good margins, but man, it's coming down. So it's at $102. Gosh, it traded flat for almost 20. It traded flat for like 20 years. So we've got some time on this one. So we're gonna pass on IDA. Korea, LNT, McGee, me, NGG. Okay. Korea Electric. I think I used to own this one. Okay. So they do 58 billion in sales. Their income is negative 17 billion. Oh my God. Please, little debt. Please, little debt. Total debt. Okay, this is KRW. Let's. Okay, KRW total debt. So this is, I think, 9 billion in debt. Total liability is 194. Total assets 234. That's really close for comfort. I mean, God, it's in millions. So 1, 2, 3, 1, 2, 3. So 94 billion. That's crazy. Is that right? Ah, man. We're gonna have to pass on this one. Our institutions, insiders are buying. That doesn't show down here. Let's see, KEP. Wow, I mean, it's at the buy. It's historically this is a good time to buy. 21 million shares held by. So I have to do 21 million 100 divided by 1 billion times 100 2%. So institutions have been buying a little bit because we can see they're at 1.5%. Now it's at 2%. So historically speaking, if you have time on your hands, this might be a good time to buy. I just can't. I mean, I can. I don't know. I don't know how to feel about this one. Earnings are super negative. Earnings per share over the past 5 years is really high. Sales are really low. I don't know about this one. What's it been doing over the past few weeks? I guess it's been going down. What about weeks? It's breaking up. So wow, it went from $5 to almost did a 100% move. So not bad, not bad. Could be a good one to get into that if you want to do it. L&T 4.2 billion in sales, revenue super slow, but it's increasing. 8 bill in debt. Wow, their debt has doubled. The interest rates are going to kill them. We're going to pass on this one, you guys. Unfortunate outlier. Looks like a touch of the 365 SMA would be really healthy. Skipping LNT, McGee. 772 million in debt. I'm sorry, 772 million in sales. Total debt 728 million. So they're okay. Are they improving? Their debt's getting bigger. The revenue is getting better, I guess. Net income is flat. It's better, but it's flat over the past few years. Gosh. I mean, it's not the worst one we've seen, but it is overvalued right here on the PE, so we're going to pass on that. NEE. Overvalued. They make 24 billion in sales. Wow, look at these buys. 24 billion in sales, total debt 64 billion. Oh, man. Skip. National, what is this? National Grid PLC in England. 27 billion in sales. Total debt 42 billion. We're going to pass. It says it's undervalued, but that's crazy. All right, moving on down. OGE, PCG. We know PG&E. PEG, P&M. All right. $35 stock. They make they do 3.3 billion in sales. 4.5 billion in debt. It's kind of getting better, but that's pretty bad. Insiders were buying. Total assets 12.5, total liabilities 8.1. That's a half of a ratio. 1.5 ratio. This isn't the worst one we've seen, you guys. If it came down to the $20 to $30 level, this could be interesting. We're gonna skip on it. PG&E. They make 22 billion in sales. Oh, look at all this selling. Fire Victim Trust. Holy shnikes. 22 billion in sales. How much debt? 52 billion in debt. Is that good or bad? Ooh, that's bad. That's tripled, doubled, just tripled. Tripled since 2015. The debt. Has their revenue tripled? It has not. Danger, danger. We're going to pass on PG&E. Is this one any better? Same as PG&E still. 22 billion in sales. Total debt's 52, same. We're going to pass on that. PEG. 11.2 billion in sales. Total debt's 20 billion. It's not getting any better. We're passing on this. PNM. All right. 2.35 billion in sales. Total debt's 4 billion and that's doubled. That's not good. They're paying it off substantially, but it needs to come down a lot more. This could be good if it loses 50% of its value, which I would never want that to happen to anybody, but too overvalued. We're going to go down to the last 5 for page 2 or 6. $81 stock. Looks healthy on a chart. 4.49 billion in sales with debt of 8 billion. Their debt doubled, their revenue is not doubled. So nope, passing on Pinnacle. Portland General Electric, I used to pay them every month. 2.7 billion in sales. Total debt 3.96 billion. No, not the worst. I mean, their debt isn't as out of control as others. Good dividend, but nope, it needs to come down substantially, in my opinion. Wow. Come down to 30 bucks, baby. 30 bucks. We're going to pass on Portland General Electric. PPL, People. This one's been trending down for a while. 8.5 billion in sales. Total debt 14 billion. We're going to pass. Wow, their debt has been kind of crazy forever. This is a big no-no. Passing. Next is the Southern Company. This one sounds familiar. 29 billion in sales. Please be healthy. 29 billion in sales. 57 billion in debt. Oh my god. 104 liabilities, 134 in assets. That's dangerous. Total revenue has done well, but not doubled. Net income has... It's kind of all over the place. Yeah, we see a lot of insider selling. Okay, doesn't surprise me. We want to see this get to 40 bucks. Tennessee Valley. Ooh, big move, big move. Ooh, look at that drop. All right. Oh, wow. No sales, no income, no anything. This will be fun. This will be fun. Nothing. They're a company, Tennessee company, and they're not reporting. That's sketchy. That is very sketchy. We're going to pass. All right, page number 3. Last page. Only 3. All right. And I want to do a bonus, and I want to look at independent power producers as well. Let's open these ones. Hoping they manage their debt in a better fashion. All right. Ooh, this one has had a fall from grace. All right. Renewables, via renewables. Oh my god, a 52% dividend. I don't think that's right. So they make 465 million. They're losing. They're not profitable. Their debt 120 billion or 120 million. Okay, so they're not profitable, but they're not bad. So let's run the numbers here. 465 million point. So it's everything can be in shortened. So minus income of 14.2. We're not going to include the market cap because it is under 1 billion. Cash is 45 million plus 45.86. Debt is 120 minus 120. All right, 376, and we're going to divide this by 2.4. $157 stock. Is that true? Are institutions buying this like crazy? Let's see. VIA. Institutional ownership is 26% as of recent data. And this is 37%. So institutions are selling. What's going on with this company? It operates retail electricity and natural gas. What's going on with the revenue? Revenue used to be 548, a bill 800, 550, 393, 460, 465. Kind of all over the place. I think this would be a great long-term turnaround once we could see some consolidation, a rounding consolidation down here, and then, if the company can execute, see this go back up towards, 30, 40, $50. I have it at 157, which is obviously not, I mean, is it realistic? Maybe. I mean, it's a really low float, 2 million shares float. Someone could come up in here with $12 million and make this thing go to $100. So that's crazy. Yeah, I wonder. Let's see if there's any manipulation going on. This is via not manipulation, but a long play by someone who's kind of slowly waiting for this to go their way. So based on this, it does not look like that. We had insane level of selling right here. Was that a reverse split? What kind of split is that? A 1-for-5 split. So that's not good. And they cut their dividend, so I'm not 100% sure what's going on here. So it looks like I had this one charted out before, and I had it coming down, but it's all skewed off because there was that split. So yeah, this is not looking too good at the moment. On the yearly, yeah, it's just not looking too good. Yeah, we're gonna have to see some major turnarounds for this company. So cool. Let's move on to the next one. WEC. They make 9.5 billion in sales. Total debt 17 billion. Oh my god. Just downtrend. It's just going to be a downtrend. It's not holding. Yeah, gosh. Could it get to 54 or 36? Maybe. It's overvalued, yeah. That debt is just going to haunt all of these electricity companies. $15.6 billion in sales. Revenues looking okay. Total debt, 24 billion. Why are they doing this? Oh my god. Yeah. We're gonna have to pass on it. All right, now I think we're in the independent energy area. Wow, look at this. This might be a really good potential opportunity. They make 576 million, but they lose 332 million. This should be around a $10 stock. Just so what I'm doing is 576 in my head. Actually, the 12 1.2 billion here. So let's stick to our normal procedure here. So let's just look at their debt. So they make 576 million and they have 1.16 billion in debt. Is there revenue? Did the revenue double or anything? Kinda, almost. Um, man, it doesn't look too bad, but they need to cut that dividend. I don't know if they cut it yet. Cut that dividend and gosh, they're just not profitable. Were they ever profitable? Yeah, they were. What happened here? Operating income went negative. Oh wow, their margins are so low. Oh my God, their gross margin, it's gotta be 16%. This is just ugly. Um, I mean, okay. Institutions, it's showing that they're positive right now. Institutions own 24%. They could be getting ahead of, they want to get the long-term capital gains. So if they're buying now, this could be an Elliott wave pattern where we have one, two, and then three would be basically it would be huge. It would be probably put it into $100. So what needs to happen? Let's just calculate this out really quick because the only reason I'm entertaining this idea is because the pattern here is it looks orchestrated in my opinion. I mean, look how it's gently going down this way. It looks like management's getting plenty of time to think about how they're going to turn things around. I could see this getting back to maybe 15. So let's just do the math here. It just looks too orchestrated, too uniform. So 576 million. And I'm doing it longhand because market cap is in billions. So 506 million minus 334 million, 300,000. Yep. Plus 1,280,000,000. Add cash, remove debt. They have 581 million plus 16. All right. Total debt minus 1,163,07. Yep. 1 billion. Yep. Okay. And now this divided by 21,310,000. $44 stock price. And it's currently at 23. That's pretty good. So are they taking care of their debt? Yeah, they are. So I went from 1.2 bill to 1.1 bill. They paid off 47 million. Are they forecasting positive guidance? Not really. Over the past 5 years, it's positive here. So they could project negative here. So in the event that they actually do suck, they're not letting people down. But if they do beat, then it looks really good. Okay. Okay, now our institution's buying. That's my question. KEN. I'm gonna say maybe. Maybe. If it's slowly going down like this, like they can it's like, okay, if they suck, the lowest they're gonna go is maybe 15, 14. That's 30%. No, 2, 3, 2, 3, so 2, 4, 6. 40% drop from here. And depending on how much institutions are adding at, the intervals. Okay, 15.4%, meaning they're selling. Yep, so they've sold about 9%. So, again, we're going to wait. If we could see RSI get down to 40 or 20, sorry, 30, that would be great. So it needs a little bit more of a sell-off before we get into this, in my opinion. I do like it, though. I'm just going to note it down. KEN RSI at 30 looks good, plus monthly Momo. Okay. All right. Let's move on to NRG. Wow, this one's been trading sideways for a while. If you bought this stock in July of 2014, you're probably kind of annoyed because it's the same price as it is today. It actually looks like it's turning around right here. Momentum's turning, strength, money flow. So, oh, you guys can't see the money flow. Money flow is right here. Okay. They make 31 billion in sales. That is pretty strong. Total debt, 8 billion. Woo, we got ourselves a winner. Okay, we're gonna chart this one out. Dang it. No. Yep. So we have a mixture of billions and millions, so I'm gonna have to do longhand. 31 billion 370 million minus 1 billion 854 million plus 8 billion 470 million. Yes. That was right, yeah. Okay, oof. I just saw their debt or their quick ratio to the debt. So cash and short term is 430 mil plus 430 mil minus the 8 billion 039. All right, and we're gonna divide by 228 million 250,000. $133 stock price, 37. This looks really good. Institutions own 99%. I'm going to guess it's higher NRG. I'm going to say over 100%. 112%. Oh. I'm guessing Vanguard, BlackRock. Yep. BlackRock sold. Vanguard added a little bit. Putnam added a little bit. State Street added a little bit. Fezna sold quite a bit. Wow. A small cap is investing in this? You guys, this is pretty big. Wow. 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 It's been up here before. Wow. Okay, so last 10 years, 2013, it went from 14 to 40 to 10 to 40. So what makes this run any different? Oh my God, their gross margins are horrible. Look how much money they're paying. They pay 31.2 billion to make 31.3 billion. Oh my God. It hasn't always been that bad. They're making a profit of $75 million when it used to be in the billions. What the frick? What in the fudge? Oh, trailing 12 months. That's why. But still, they pay. I don't know. I'm being judgy. So what that means is I'm only looking at 7 months worth of data, but still their money's gonna come at the back half, the back 3 months of the year. Ugh. I don't know if I like this one anymore. Let's look at the yearly momentum. Yeah, it's coming down. So kind of one big cup and handle, but momentum down here is kind of breaking down. So, um, I mean, yeah, no, it's just the gross margins are horrible. So we're gonna pass on it. That's one we'd have to check in on January of 2024. Look at this. This one's gone over a couple 100%. Pam, profitable. They're paying off their debt. They make 625 mil. What's their debt? Data's a little out, a little old. Oh, this is ARS. Okay, so Pam, total debt. So this is 149 billion. Okay, so this is 584 million US dollars. That exceeds their, no, not really. How much cash do they have? 58, I mean, they're growing like crazy, but just 3 to 70 to 8 to 40. God dang. I think we missed the boat on this one, but also at the same time, yeah, it's too hot down here. At the same time, gosh, I don't know, it looks really good. Damn, it just looks so good. I don't think I could justify chasing this one though, so we're gonna pass. Would I want to look back? I mean, it's so 2013, so it'll come back. I'm just gonna say Pam in 2028. Okay. Yeah, we'll check back in on that one. All right, $9 stock. Let's check it out. Canada, 2.5 bill in sales. No information down here. Oof, look at this debt. Can't be good. It's showing as overvalued. We're gonna pass on CAC. This is the last one. This is a Vistra Corporation. They make $15 billion. Ooh, lots of buys. They make 15 bill and they have total debt of 13 bill. All right, are they reducing it? Not. Wow, they used to have 33 billion in debt. Crazy. All right. Wow. Okay, we're gonna do the math on this one because it's keeping its head above water. So, doing our quick little calc of 15 billion, 030 million. They are losing 394 million. Plus 9,680 million. Yes. All right, let's add cash, remove debt. Cash in short term is 455 plus 455 million. Total DEET minus 13,292 million. And we're gonna divide by 370,900,000 shares. $30 stock trading at 26. Not bad, not bad. It's kind of new. Institutions own 98%. Let's look at their numbers. They went from 5 bill to 5 bill to 9 bill, 11 bill, 11 bill, 12 bill, 13 bill, 15 bill. They tripled. They tripled since 2016. Has the stock price tripled? It's doubled. I'm getting a little feeling here. VST, let's look at, I think institutions own more than 100% on this one. Yeah, 104. So they're buying. That makes sense. Uh, it's gonna probably try and go for all-time highs at 27. Gross margins 100%. That's beautiful. They used to have 33 billion and they brought it down super low. So what's net income? Ooh. Ah, they're getting out of a hole. So man, they're buying like crazy after some major sells. This one looks pretty good. Um, man. Um, I like this, and I think it would be a good addition to a long-term potential purchase. It's trying to break upwards. I mean, it's hot. It's hot. Like temperature-wise, it's hot. It needs to cool down a little bit. Okay, so it's hitting resistance. Let's see. A lot of resistance right here. Yep. Okay. So this is a good area to watch. What I want to watch for is I want to see it cool down and I want to see it bounce. Every time that it's gone up and tried to make a move, it's always came back down to confirm the move. So we could see a sweeping move under or come in touch. So I'm just going to make a note for VST. Price target was 30. Currently 26. Yeah, and I mean they're growing their revenues. They're slowly paying off debt. Sales are good over the past 5 years. Earnings are not. That's fine. They're barely not profitable. Uh, so yeah, not too bad, honestly. Um, cash, yeah, and their total debt. I mean, they used to have. Oh no, they used to have 11 bill, 11 bill, 10 bill, 11 bill, 14 bill. They're cutting it down. So yeah, we're gonna want to watch that. Total assets 31, total liabilities 25. That's really close. So all right. Out of the 40-ish stocks we looked at, the best ones were, drum roll please, drum roll, drum roll, drum roll. These were the best ones. AEE, AEP. No, AEP was overvalued. I should just take that one off. No, both of these were too high. Yeah. So I said price target is 61, currently 82, overvalued. Price target 46, currently 84. So I'm going to delete these. All right, so these are the ones that I like out of the 43. So it's about 10% almost. 1, 2, 3, 4, 5, 6, 7 of them. So Duke, we want to wait. Duke Energy, we want to wait till it gets to 200 SMA. ENIC, price target to 21, currently $3.33. That one looked really good. GNE also looked really good. Price target of 21, currently 14. HE, we want to watch 365 SMA. KEN, we want to see if the RSI can get to 30 and then see if the monthly momentum comes with that as well. So we can get a potentially nice move there. PAM, we're going to check back in 2028. And VST looks good. Price target 30, currently 26. This is one we're going to want to watch quarter over quarter. When is their earnings? May 9. Let's see. This was for VST. I already have it charted. Wow. Yeah, it looks really good. Okay, so next earnings is 8/4. Okay, so next month. We're gonna want to watch it. All right. I'm just gonna make a note. All right, you guys, if you made it this far, please consider hitting the subscribe button. Leave a comment. Let me know what you think. And I hope you're doing well. Talk to you later.